Hey guys, Mike here. So hope everybody is having a good weekend. And this week coming up is going to be a big week because we do got a lot of economic news. And again, what am I waiting to see when bad news actually is bad news for the stock market? That's what I'm waiting to see because you've seen what have you seen most recently and stuff where you go, wow, this is really bad news for the economy. And the stock market goes up or something, right? So I'm waiting to see that kick in because eventually reality does set in. So let's pay attention to that. Also, you're going to see a theme play out as I show you, these index charts and the stock charts, something this week. And I want to see, obviously, how it plays out. So it's going to tell us where we are going, but you'll notice that. And another thing is what's going on with the bond market and what's going on again with bankruptcies. I told you I'll keep you up to date on this and what's really saving companies right now. Okay. And I think maybe the Fed knows this. They just don't talk about it. I'm assuming they're looking at the same data we are. But when it comes to bonds, I mean, I know I get this question a lot, man. It's like, when are bonds, really going to turn around? You can see U.S. government bonds heading for a third year of losses. This goes back to 74. And you can just see, you don't see anything like that. So very strange. Let me know on the bottom when you think bonds are going to turn around. Of course, we know when they're going to turn around. It's going to be obviously when we get the official Fed pause and cut rates and things like that. So I just did a video on it. And you can see TLT is probably the most popular one when it comes to retail investors, and it finally broke 90. I just did a video last week about this saying, wow, man, the fact this thing has held like 92 for as long as it has is really surprising. And then boom, you end up getting the Fed meeting, it gaps down, breaks below that support level. So we'll see again, maybe it's going to wait till November to see if they do that last rate hike or not. And so we'll have to be patient on that one. But when it does, of course, it should do almost like an epic rally when it comes to that Fed pause rally. So the bankruptcies, this one right here, like I said, it'll continue to get worse. There's no way it doesn't, right? There's just no way. And you can see there's 2023, there's 2020, there's 2008. So we're at those kind of levels. And again, if you just type in Google, like, Chapter 11 bankruptcies, you're going to see all kinds of stuff pop up. And you can see August commercial Chapter 11 filings increased 54% over the last year. And what's really saving companies, believe it or not, is the fact that like high yield companies, like they got maturity walls coming up, but look at next year and then compare that to 2025 and 2026. Now imagine if what's going on in 2025 and 2026 was going to happen in 2024. Oh boy, right? It will be disastrous, right? And the reason why, again, you're seeing these bankruptcies increase because, and guys, if you get anything out of this, please hit that like button. It helps people find this video. And if you like the content, think about hitting that subscribe button down in the bottom. Because of what happened in 2020 and 2021, because you just had all these companies, whether it be, the SPAC IPOs that came out, things of that nature, that had, just no business being in business, to be honest with you. All those stocks that ran up where they had like zero revenues, no chance of ever being profitable, things of that nature. And so that's why you'll see the bankruptcy ticking up, because those zombie companies, of course, will go away, basically is what's going to happen. But again, if you had that 2025 maturity wall happen in 2024, can you imagine what would happen? I mean, it would be disastrous. But this, I think I covered a year ago about the same kind of thing where it was showing 2023 maturity, 2024 maturities, and they're just nothing because most of the companies are smart. They got this pushed out till 2025, 2026. And can you imagine if rates were to stay where they're at now that long? Come on, we all know. I mean, you don't even have, you can be a homeless person on the street and you can ask them and they'll say, oh yeah, if you keep rates high that long, then yeah, I mean, they're definitely going to break something. Like something for sure is going to break. There's no way the bond market is going to continue to go like it does with that long of the rate staying that high, just because the way the system is set up now, right? Since the government took it over, that's just the way it is. And can you imagine if they kept it that long, what the debt would be? Have you seen what the national debt is right now and how fast it's going up? I mean, it's every time you think, oh, it can't go up any faster, it's like, sure can, right? That interest on the debt is an amazing stat if you haven't seen it. Now, some of you guys asked me the other day, said, well, I don't understand what you're talking about. When you're saying the big money basically found a different way to run the stock market up, right? And this is what I agree with Tom Lee when he says, even he says that the stock market never makes sense. And in a way, every once in a while it does, right? But for the most part, it never does. But the reason why is because we don't know until it's actually happening how they're going to run the market up, right? I mean, the market goes up, what, 68% of the time or something like that? And so, but they found different ways every single time to run the market up, right? In 2020, what was it? You had the big boys going up, but like everything was going up. All those IPOs were shooting through the roof, crazy amounts of stuff going on. .com bubble, obviously something. There's another bubble coming on. So you really don't know what the bubble is right now. Whether it's a bubble or not is really obviously AI, but also these 7 to 10 stocks that ran the market up. And that's what they did. They found a way to run the market up every different time coming out of a crash or whatever in a different way. This time it just happened to be 7 stocks, even though you can span it out to 10. But the 7 stocks are obviously up 50%. And then you got the other 493 are up 4%. So they're basically flat. Okay. And another way to look at this is take your time on this one. But this is the percentage of large cap stocks above their moving averages. And when you can go up from 5-day to 20-day to 50-day to 100-day to 150 to 200-day, and you look at the percentages, and there's the S&P 500 index, and above their 200-day, I mean, you only got 50%. You would think with the S&P up as much as it is, you'd have many more stocks than that. And then you come over and all of a sudden you start looking now when it's starting to run down, it's only 33% above their 50-day moving average. Then you can scroll down, look at energy, financials. Obviously, you got the number one's energy, 91% over the 200-day moving average, 87% over the 50-day moving average. Then, of course, we go to information technology, the IT part of it, 65% over the 200-day moving average, which is a little less now. This came out last Wednesday, I believe, before the 2 big red days. But only 34% above their 50-day moving average. But when you go to some of the others, I mean, it's just abysmal. I mean, look at real estate down there. Look at utilities. Oh my goodness. Look at consumer staples. I mean, there's just so many other sectors that are just they're not really doing anything. They look terrible, is what they look. But again, it's the market weights and things like that has allowed this to happen. And again, this happens, I mean, go back through history from the 50s, 60s, 70s with Nifty 50 and all this different stuff. We just got to figure out ahead of time, like or not even ahead of time, but as it's happening, like where are they shifting this money to try to drive this market up this time? So in the next crash, that's what you got to be focused on. Okay, where is it going now? Where's the money heading into to try to drive this market up? Because they always it's easier to move it up, right? They always want to keep trying to move it up. And what does that do? Because it gets people putting money in. If the market's coming down, think of it simply, people don't put as much money in. So just keep that in mind. Now, keeping these charts simple, S&P 500 right here, you can see those August highs. It dipped just below it on Friday at the end of the day when it started doing that sell-off right at the end of the day. I mean, it sold off after like 11 o'clock, but they really started pushing down like 1 to around 4 o'clock. And so, it needs to hold this right here, but more importantly, it's just this channel, right? It's been in this channel since October low. And so that's the key to hold this channel right here. If we add in the moving averages, you can see 200 is right below it. And this is what you're going to see. You're either going to see these stocks and indexes are sitting on these different channels, or coming close to, the 200 moving average, or sitting on a major moving average. And so that's why this week's going to be huge to see. So, because again, you break below the 200, nothing good happens below the 200. And one thing that could help the S&P drop even farther is now you got XLE, which of course S&P has a lot of these stocks on there, breaking below this channel, coming back up, which is now resistance, right? And it got rejected. And so if XLE starts to head down, obviously those stocks are heading down there, that will help the S&P get pushed down even further. Now, when you look at the Dow, which I normally don't talk about, but with this one, what's going to happen here? You got a lot of confluence. You got major support, major trend line, and a 200 daily moving average. You see this goes back to February 2022, right? So it's got 1 rejection, 2 rejection, 3 rejection, 4 rejection, 5 rejection. And now here we are coming up to see if it's going to actually hold its support where the 200 is. And you can go to the left right there in the volume profile, and you can see there's plenty of support there. So that's going to be huge. Nice setup for a bounce. Obviously, if it doesn't bounce, you're going to see a whole lot more downside. Q's sitting here in this downward channel right here. And you can see are we going to come down? So we already broke below that trend line I showed you on Friday. And finally get a bounce. But that's a nice drop right there if it continues to drop. And so that's what we got to keep an eye on. A lot of gaps above, a whole boatload of gaps above. There's also a very big one below us. All right. So, and really, let's be real about this. If those big stocks, as I'm about to show you, continue to sell off, of course, the Qs are going to get absolutely hammered, right? Do worse than any other index. Now, the IWM, you can see it come down. Started filling this gap right here. But you see, there's a lot of support. You look at the volume profile and you look to the left. I mean, there's a lot of areas here where this could have a problem continuing to move down. And you can see, but it's broke the 200. It's broke that year-to-date anchor VWAP. I'm going to add this trend line in just for the heck of it, because we have had 3 bounces off of it to see if it continues to sell off, fills that gap, which would be smart. As this head and shoulders continues to play out, it looks like. Then maybe you get a bounce off that trend line right there, which lines up with like 172, I believe. So keep an eye on that, because small caps are just a hot mess. Now Tesla, you can see right here, I mean, it's just all about this triangle right here. And it's just been wedging in this triangle. So this could continue to play out going all the way up into December, really. And so, again, however this plays out, it is going to be an enormous move on Tesla. So you could just see it range in here, right? I told you, if it moves up the upward trend line from here, it's only like 13%. And for Tesla, that's nothing, right? And so I think most people are betting we're going to come down to that bottom trend line. Obviously, if this weakness continues. Now, NVIDIA, here's another one sitting on a major moving average, sitting on the 100 moving average. I showed you that chart the other day about the distribution with Wyckoff and stuff. We'll see if it plays out. But you can see, I mean, the 100, it respects it, right? I mean, it's got many, many rejections off the 100, multiple, pops off the 100. And so we'll see, because obviously as NVIDIA goes, the semiconductor sector goes. And, this is one of those ones, if it starts to show weakness, just because of this big run up, it's definitely going to drag stuff down. And so, I mean, AMD doesn't look that hot. But you can see on the RSI right here, I mean, finally, it's been a while since we've even touched oversold territory. And you can see it can stay down there for quite a while. So, again, we'll see if we get maybe a small relief pop off this before continuing to heading down or not. And then when you look at Netflix, hold another one right here. What's it doing? Sitting on a major trend line, filled this gap right here. There's the 200, not very far below at all. Lines up with some support right there. And so it'll be a perfect spot for a relief rally on this one. Maybe head back up to the upward trend line on this downward sloping channel. And before it hits a whole bunch of resistance. And then you got Meta. This is another one, major trend line right here, which showed support since the beginning of 2023. Lower highs right here, but it came back up. It's rejected multiple times off this trend line now, right? So it looks like it's trying to finally push over after this insane run right here. You can pull the moving averages up yourself, and you can see it's sitting, basically trying to hold into the 50, but the 100 is not far below, as we can see right here. So it's hugging that 50 like it's its mama. The 100 is not very far below at all. But you can also see pulling that volume profile up. There's plenty of support right here, which would be probably right at the 100, right below the 100 right there. So let's see if we get a bounce right there. And that could take, not just next week, a few weeks. Remember, we're coming in October, especially November. You get more bullish sentiment because of seasonality. Now, earnings, we finally do have some kind of earnings. It seems like it's been a while. Monday, nothing to worry about. I do want to hear from Costco on Tuesday. I think the chart's been looking pretty good if I remember. Cintas also will be the one, because that's going to tell us they want to do the uniforms and stuff. And so it'll tell us what they're looking at and how far employment, things like that is, because if they're slowing down, that's not a good sign. Micron, of course, with the semiconductor sector, we'll hear what they got to say. CarMax, obviously, I think the car industry has been a mess. But we'll see if people are still buying used cars, or are they down? Nike, of course, that stock has just been getting hammered. Again, a lot of China weaknesses hurting this one. And then we got Carnival Cruise Lines, and I just want to hear, are we traveling? Are people still paying those crazy prices for these cruises? Now, a lot of economic data coming out this week. You have the Chicago Fed national activity, Dallas Fed manufacturing. You will have a lot of Fed presidents speaking. Then we'll have a lot of real estate information coming out on Tuesday, which, I mean, I expect it to still be a hot mess. I don't know about you. CB consumer confidence, Richmond Fed manufacturing, and the services information, which people like to know about. Then you'll have on the 27th, a whole lot of durable goods orders coming out. More importantly, though, on the 28th, that's going to be a huge day for economic data. So put that on your calendar. 8:30, pre-market, you're going to have all the jobs data coming out, core PCE prices, corporate profits, and GDP. All right, people are going to pay attention to this. Looks like they're expecting an increase in the GDP quarter over quarter. GDP prices index, they're expecting a huge drop from 4.1 to 2%. So pay close attention to that right there. Then you'll have PCE prices quarter over quarter, and then real consumer spending. Once the market opens up, you get a whole lot more data about the housing, and then Kansas Fed Composite Index and Kansas Fed Manufacturing Index. So make sure you set alerts for that. Then on the 29th, more economic data with core PCE, which of course the Fed loves to look at, and then PC price index month over month and year over year, and personal income month over month, personal spending month over month. Again, if you look to the right, they're expecting an increase in the income and a decrease in the spending. I believe the spending keeps coming in hot because they keep raising prices and we keep buying. So just pay attention to that. But you're also going to have Chicago PMI and then all the Michigan consumer sentiment, which I'm going to guess is going to be down because when the stock market down, that is usually down as well. So I don't really expect that to do anything. It's really going to be more about the PCE and things like that, and especially the GDP, which if you look at the Fed and their projections, I mean, it's all over the place, right? Because you look at the Atlanta Fed versus this other Fed, I mean, they are nowhere close to each other. So, we'll see. Let me know in the comments what you think is going to happen on that. Again, what you're looking for more than anything else is say when it's bad news for the economy, starts becoming bad news for the stock market. That's what you're looking at and everything. So let's just keep that in mind and pay attention to the generals, right? As I've been saying forever. As the generals goes, the market's going to go. Apple will be the number one on that. So see if they can continue to defend that 173 to 174 area. If that breaks down to 165, it's going to be a nice big drop. As I said, and I showed you, coming up on some major moving averages, setting on some major trend lines. A lot of them have some confluence to it. That's what you're really looking for. And so let's see if the weakness continues this week. And maybe it's just a big setup for the fourth quarter. Maybe it's something bigger, right? Because you're starting to see the bears come back out, like the people that are always bearish no matter what's going on in the world, and saying, oh, here we go, 50% drop and all this good stuff. And, we'll see. Again, I don't see, again, if a major, black swan event or a credit crisis happens, yes, we're going to have a huge push down. But without that, it's going to be tough to have that kind of big move. I'm talking about like 5 to 10% maybe, just in that's normal pullbacks that I expect. But, again, we'll watch the bond market. That's the ones that's going to tell us what's going on. So hope you guys got some out of it. Please hit that like and subscribe button, guys. Appreciate all you guys who watch the videos and all your support. And I will see you tomorrow.